So a quick run through of some social trader tool stuff. Gold long-term fixed set. This set's in the Google Drive, I'm sure. It was one that has been back tested now. This is like a 2022, 23. So it's like 23, 24 months now. It's had a wobble maybe once, maybe twice max in that period in terms of like an extreme move just at the wrong time. I copy this to 1 or 2 accounts just on low lots. As you can see, it's good for a couple of % a month. Just steady. I can add that in with some other stuff. So yeah, it's a fixed lot. This is a 100K account. They're all 0.3. Not actually using live delay or anything on that because it's a set file that was done and created before that was even a thing. It could probably be improved, but it's running, it's fine, it's good. This is a set that I've run on and off for a period, but I think it was running before, but then my VPS went a bit haywire or something went wrong. And then I've reset it at the end of September. Again, you've got to build these portfolios. You've got to run them live. You've got to take confidence. So Johnny in the Discord, your next thing is to just do what we're telling you to do all the time. It's just slow down. Don't be buying challenges. Don't be fucking about trading live capital. Just build some demos. Let them run in the live market. You're aiming for 2 to 4% a month. If you're doing 822, then you'll probably make more but hit more losses, and that's okay, but let it play out. And then those that are running 822, you can't just do that and then leave it. Every 2 weeks, you're going to be out of sync with the market. You've got to move with the markets and change it every 2 weeks. Even if you've had a good 2 weeks, you're just playing with danger. You're just going to overrun the set file, and then you're going to get caught. So even if it's going well, especially on 822, move with the market, be organized. Man is doing a great job of trading that way. And that's also because of the detail and organization behind the scenes. It's the journaling. It's the keeping track of everything. It's been organized. And it can work great. It can work better, maybe. It can work just as well as a longer term test in different ways. Okay. So this is my gold double confluence thing, the thing I've been speaking about since before Christmas. So I've got an hour 4 EMA. I've got 5-minute ADX, and it just continues to smash it, really. 5% a month, this is quite averaging. I mean, look at that for consistency. All of these masters, by the way, were left on during Christmas time. We did have a GU sent file that Fraser was running that went haywire in a GU move, I think the week after Christmas. He wasn't copying to live capital. That wasn't being used anywhere other than a good demo that I think was 200% up at the time. So obviously that can happen, but it's a good stress test to a point. But yeah, it's just something to be aware of. It was quite an aggressive set file anyway. Obviously not something you would run on funded accounts. You'd run it on sent stuff, maybe. It depends on your risk. And if you've pulled money out. That's one of the things when you're aggressively trading smaller live capital or doing sent stuff, paying yourself off in is key. Because if you're trading without an EP or risk as such and there's a big move and you've managed to build $1,000 up to $4,000, then make sure you've at least pulled your $1,000 out. But withdrawing often is going to be key to make sure you're then not overexposed and hand it all back. 2% up on this one for the month. This is what was copying to my Infinity account where I'd scaled it up and up and up and up and up, added some of the sets, but got the lot size. I'll come back to that in a minute anyway. But these are all 0.5 lot sizes, which is low, right? It's just low. Yet we're still seeing this consistency here as well. 1 hour a day strategy. I hadn't had this on my social trader tools. It was just on my VPS. As I've said many times, I've just been watching that account, just getting a feel for exposure. They're all USD pairs on the hour that USD market opens. So you could say it's quite a correlated strategy. It is, but all of those pairs have so many different dynamics during how they move, and it's 1 hour. So yeah, there's so many different things at play. I've not had exposure of all USD pairs at any time since it was turned on. I think that EP there was a USD CAD move. The USD CAD set that's on is probably the biggest in terms of lot size. It's capped at 5 lots. But what's great about this is just the lack of exposure for 23 hours of the day. Obviously, there'll be trades that continue to run outside of session if they're open, but it's not very often. Yesterday it banked 300 within the hour and was off. So yeah, I definitely think this is something that all of you can bring to a portfolio. Now, you've just got to know a few things. I know a couple of you asked about live coaching on this. It's just not required. It's just 1 hour when the markets are the most volatile. So we're looking for trend style strategies, or even RSI, looking for the extremes. Have quite an open optimization on it and let the data and the analysis and the optimization tell you what works best. This is 1:30 to 2:30 UK time, which is US open on US pairs. Now, you could do similar. You could do Asian and Asian market crossover. You could do GU between 7 and 8 in the morning. You could try a few different things. I just like the fact that, hey, this is banked 15% in 2.5 months. Not even that, right? November, December, yeah, 2 months. And with very little exposure. My view here is it's easier to work out what pairs are doing in that 1 hour where the market's open for 1 hour out of 24 than it is to get something that works or is in sync with the whole 24 hours. So I wouldn't run all my portfolios this way, but I definitely think it's something you should have there ready to bring into a portfolio or to an account where you can trade this way. Most of these sets are martingale, but capped to a specific point. So if I was to redo this for HFT style firms, I would have to manage that in terms of lot size consistency and not optimize in that particular way. So in short, just make sure you know what hour you're looking at and that you're in sync with what the market's likely to do for that hour. I wouldn't be back testing for this hour for ranging sets because it's the most volatile hour of the 24-hour trading day. So you just got to have some common sense with that, really. And then do what I've done. Just make some decisions, review your optimization. I think this is running, 5 major pairs and gold. 1, 2, 3, 4 pairs and gold. And just turn it on and come back in 2 months, 3 months and just see how it's going. That's my best tip with it, really. Power Copy is back on, been running for the past week or so. This is the master account. This has had 0.8% drawdown. This would have passed the fucking funded account really easily. But obviously, we could very easily see drawdown way above that. Not way above, but outside of a prop firm thing. And yeah, subject to when you turned on and where you're on with. Your results will vary, but this is from the start. And it's just steady. That's the whole plan with it. Steady, consistent. We've done this stuff before and gone too hard because you can trade cent files aggressively. We're just trying to find the nice balance with this, with the insurance, but build it steadily up over time. We want this running a year from now with accounts that have doubled, with low drawdown, etc., etc. Quantec. So I'm going to get to my Quantec account shortly. I'm now on an A-book with them. So they and this is what we'll do with only funds. I'm going to talk about that later too. But once we can identify traders that are consistent, it's making sure that we can leverage that. It can be just as big a profit opportunity as people failing. Hey, look, and here's the truth. People are always going to fail. Otherwise, you wouldn't have 90% of retail traders failing. It's just how the game works. It's how normal retail brokers work that aren't prop firms. There's always going to be a high failure rate of people trading because of the fact that you don't have to get a degree. You don't have to go through any form of competence to just start doing it. So it's always going to be the case. But anyway, I'm on an A-book. I don't have consistency rules anymore with this. I still have to close on weekends. There's no news restrictions. So if you're getting involved with Quantec, show some consistency, and I'm sure they'll reach out to you at some point to do the same thing. But I've done 1,800, it's only 0.4%. I've done that in 4 days this week. And yeah, that's going to build over time. And there's a scaling plan with this, etc., etc. So that's just something I'm sharing there. Copymaster I've shown. This is an interesting one. NZD, CHF, AUD, CAD, set files in the drive. Now this account has had an AUD CAD sequence that's been open for some time. That's been in more drawdown than I normally see with that set. It's normally a very robust set. But it's enabled me to leverage the copy trade method with this account on other accounts numerous times. It was fundamental in my field funded traders pass. You know, once it was at a level, just bulk copying and managing the equity point on the slave accounts, it can work well. Likewise, it's not going to work all the time. And if that move was relentless again and it was still high risk, and you know, hey ho, that might happen from time to time. But I've definitely had it work for me more than it has against me by an absolute mile. And don't forget, right, with prop trading, there's a very unique risk to reward at play. And what I mean by that is, let's say you take another loss on a funded account and lose the account. That's not cost you 10 grand. It's cost you $500 or $1,000 in a fee. But if you were to make 5 grand or 10 grand by doing this, and you get your 80% or 70% split, you've made 3 to 7 grand or 8 grand for the risk of, if it was to go wrong, you've lost 500 or 1,000. The dynamic of that is wonderful. If you were trading live capital, the dynamic of that would be very different. The risk and the return would actually be parallel. Yeah. I still leverage copy trading on drawdown a lot on live capital too, because it's an opportunity to bank even more again. So, you know, it's still there, but it's just a bit different to the prop trading thing for the reason I've just said. Right, on to Darwin X.